You're listening to the Real Estate Entrepreneur Podcast with Terrence Murphy, where we cover sales, investing, and entrepreneurship with an emphasis on real estate. Each podcast, Terrence and his guests will bring you informative and inspiring information within the real estate industry.
Welcome to another episode of the Real Estate Entrepreneur with Terrence Murphy. We're going to jump into this episode. Man, we've been having some really good feedback on the podcast. Kyle and Sarah and myself, the team. So it's been fun, man. It's been really good. Give my squad a shout out in the back. But yeah, so I'll start off with a quick quote, and then we're going to dive into our guest. So this one's by Tony Robbins. It says, "No matter how many mistakes you make or how slow you progress, you're still way ahead of everyone who isn't trying." So that's why you just got to get out there, man. You just got to try shit. You got to take risk, and you got to put your neck on the line. That's the only way you're going to scale. It's the only way you're going to grow. And it's the only way you're going to be an entrepreneur, because it's a big difference. So I have a guest here today. We're going to talk about his tech platform, talk about what he's doing with multifamily. Craig Cecilio is the CEO and the founder of DiversyFund. Craig's mission is to disrupt traditional alternative asset investing and empower the average investor by giving them the same wealth building opportunities available to the top 1%. Craig's visionary approach to democratizing alternative asset investing combines the power of crowdfunding with cutting edge technology through his fund and online platform. So thanks for being on the show, bro.
Great. Thanks for having me, Terrence. Appreciate it.
Yeah, man. Just tell our audience, just a quick rundown of who you are and how you got into real estate, how you became a real estate entrepreneur. And then we're going to dive into the tech platform and some other stuff.
Yeah, I mean, it's kind of a lifelong story. I always, where I grew up in the East Coast, working class family, and around me, a lot of people had a lot of wealth. And kind of from an early age, I kind of said, hey, how did a lot of people build wealth? And the story was always about real estate. Some part of the portfolio always had to deal with real estate. So I kind of knew at an early age I'd be involved in real estate in some form or manner, and kind of set out on my journey. And I started my first real estate transaction in my 20s, and here I am today.
Love it. Love it. So obviously you started doing tangible transactions, right? And walk me through your first deal in your 20s. What was that deal? I think that's always cool to hear people's first real estate deal.
Gosh, my first deals. There's like two of them that I remember. One was with my roommate was supposed to be my business partner. I got my real estate license, and I think we got a condo down here in San Diego, and it was distressed, and kind of fixed it up and put some money into it, and we sold it at the end of the day. So it was something we were just trying out, and just kind of for the first time. And I remember we were being mentored by a couple guys in town that were pretty big developers doing a lot of condo conversions, I think, at that point in time. Late 90s, early 2000s. And that was our first deal. And I remember doing a couple deals around 9/11 too. That was interesting because the world kind of stopped at those days too. Mm. Very, 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 very interesting time periods in the early days, the experiences we had.
Yeah, man. So as you progress, do you still have your real estate license today, or are you mainly focused on putting deals together?
I still do. For whatever reason, I still do have my broker's license. I didn't let it expire. As I evolved with time and started building out more of a technology company as well, I don't do the day-to-day as much, but yeah, I'm still abreast of what's of the real estate licenses and keeping them up to date and stuff.
No, I love it. So let's talk that transition. You go from being a investor early on, and then you get your real estate license, and then for some reason, technology starts to be a passion for you or something you're interested in. Talk to me about how you even got to that thought process of technology, bringing it into the real estate sector.
Well, I could say it was three things. Like first, my first two mentors, one was in real estate. The other mentor was into raising capital and the structures of how to raise capital. And the third thing is I just like people. I like talking to people and meeting people. So I'd always meet people and collect their business cards and kind of write their names down. And over time, with technology increasing, I put it into a CRM system and created an email list and kind of put all those things together. So naturally, I put all three things together. And with time, it just kind of progressed as technology kind of took off. So I was always big about, hey, growing a group of people and be able to say, hey, I got this investment. So I'd email maybe in the beginning days 100 people and then built the list to 1,000. Here we are today, close to a half a million people. in our community. So it was always kind of, I had to market myself and my services. And and so it was kind of out of the gates. I was doing that.
Yeah. And then you just added the tech piece. So talk to me about your fund. What's the focus of it? And then talk to me why the technology that's integrated in it makes it different. And then we're going to talk about your audience and the growth.
Yeah. So the platform DiversyFund was created with the idea to give everyone the ability and the opportunity to build wealth. And we do that by aggregating micro dollars for as low as $500 from people. And we pool those funds together and we buy commercial real estate throughout the US, predominantly multifamily real estate. Our typical transactions probably about $25 million purchase price, between 150 and 250 units. Had a pretty fantastic last couple of years. I think we bought the right time periods, and assets are doing really well. The tech allows us to get those lower dollar amounts instead of getting that maybe one person that comes in, an institution comes in as a partner or project. We're able to get thousands of people. We have 30,000 people right now, and they put in small amounts of money. We pull that together so we could buy these large assets. In using the technology and putting all those pieces together, it's very complex. There's a lot to it, but we were able to take an idea and here's 5 years later and build out a platform. We have an app as well that people use on iOS and Android. And it really allows people to kind of have that opportunity and the tools so they could participate.
No, I love it. I really want to spend some time diving into that. But I want to make sure, because I know you and I could shoot off in a jet and leave everybody behind, right? Because we start talking real estate, that we're just real estate guys, we're entrepreneurs, and we're going to be in the moon. So let's pull it back just a sec. So what's the difference between what you're doing, which is crowdfunding, right?
Yes.
And then syndication. So let's just talk about the difference between the two and then how you kind of see it from your perspective.
I think there's typical syndication. You're probably going to reach out 10 to 20 high net worth individuals, maybe some institutions to pull them together to have to raise the money or have the capital to purchase an asset, purchase real estate. Whereas crowdfunding, you're increasing that amount of people. I consider it syndication on steroids. So say having 10 people syndicate a deal, you might have 1,000 people syndicate a deal. In some cases, our case, we have 30,000 people in our funds. So the only way to possibly manage that and to do that is to have technology accompanying that with us, be part of the process as well.
For sure. So when you talk about your fund, do you have a fund per deal, or you just have an open fund that people invest in and then you guys go out and find the right deals?
Yeah, the way I call it, the technology stack in the compliance world, is we have a large fund. We've had 2 large funds do it. That really keeps the costs down because the costs are still high from the technology side and the transactional side, let's call it, and the compliance side. So where it doesn't really have the economic benefit to the investor. So if we had a per deal basis, the cost would be too high to do it. So that's why we create funds to do this.
It's great wisdom. So on your average deal, like you said, 25 million, 150, 250 units, what's the average that you would say, like because I know you guys have this data and this information, and I don't want to get into anything proprietary, but what would you say the average investment for your person makes? Is it $500? Is it on average we get probably $2,000 from people? What's that number so that we can give people something to think about when they're thinking about crowdfunding or like you said, syndication on steroids?
Yeah, average is great. It's $2,000 to $5,000, and what we also have is I call it a tool that we allow people to sign up on a monthly basis, so they could put in $500 a month into it. So we have roughly 8% of our community sticks in about $500 per month on a month-to-month basis. And so that's what we're kind of creating. We're creating these tools for some people who might not be able to afford those large dollar sizes, to get them involved and do it on a more recurring basis so they can kind of go on that journey of creating wealth, because just $500 is not going to get you there. But if you really compound that $500 month over month, or take the month off too, you're allowed to do that. You could do every other month. Allows people who are lower on that economic scale that opportunity and the tools to build that wealth out.
Yeah, for sure. And so obviously they have an interface. Do you feel like the main thing they're gaining is just the confidence to invest or the knowledge of the process? What do you feel like some of your investors are gaining by joining your fund and using your app?
Yeah, so we asked them. We did about 1,000 interviews, and it was crazy. The information we got back is first of all, it's awareness. Most people didn't know this existed. They didn't know multifamily investing, value add investing, what that was. They're like they didn't know it existed. They didn't know they ever had that opportunity. So the first thing is giving them the awareness and then educating them about it. Okay, this is the product. This is how it works, and of course, giving them access to it. So yeah, I was quite surprised. I mean, 1,000 interviews and almost every single one of them didn't know this existed before. It's pretty crazy.
Wow. So you made a pivot during the pandemic. I want to talk about that because I don't think people really understand when you're the CEO and you're the founder and you're leading a pack. Like we said before we got on air, it's almost like the quarterback of a team, right? When we win, the team gets the credit. When we lose, the quarterback gets all the blame. But you made a decision, man, which I thought was really fearless. Let's talk about that, on how you did that to even, heck, 20x the company. Or probably
Yeah,
more.
I mean, I read a book, I think, at the last quarter of 2019 called Blitzscaling, and it had to do with acquiring customers and don't care how much you spend, acquire customers as fast as possible, which basically means is kind of throwing a lot of money into marketing. So we made a plan in December 2019 to really take our marketing budget and 5x our marketing budget. We're almost close to $1 million a month spending on marketing. And then all of a sudden our launch date was March 1st, right? March 1st, 2020. So that was when the world kind of stopped. And everyone's kind of looking at me. I'm like, what are you looking at? We made a decision. We're standing by this decision. We're going to go for it. And they're kind of like a lot of jaws dropped. I'm like, hey, I've lived that through a couple downturns. And this is when wealth is made in this country, is when there's indecision, indecisiveness. People are not going to want to be, people aren't going to be buying stuff. They're just going to try to figure out what to do because everyone's just so scared. We're going in, we're just going to be purchasing assets. And so we started out with like about 2,000 customers at that point in time, and we grew it up to 30,000 because we made that decision. And not only was it a good decision to spend the money to do it, required a lot of customers, but we built a lot of great relationships as well. And on top of that all, we bought low. And so since then, 2 years, the prices really went up really fast. So the assets performed quite extraordinary.
Man, that brings me joy. You probably see me smiling because, man, congratulations. I'm proud of you, bro. Like, I think so many times when you're running out front of the pack, people just kind of simulate this thought process that, well, that's what he's supposed to do. It's like, no, man, that was a big decision, bro. Like,
yeah, thanks. I don't, like I said, I don't get any of the credit, but it's a team effort to get here. I have a great team in place, and without that team, we wouldn't have been able to deliver on the product that we have today. It's not all rosy at the end of the day, but it was a lot of work. So there's a lot of, we all know we all lived through that time period, but it was different, right? It's something that we're going to look back on. I can't wait to see like 10 years in the future what we think back of that time period.
For sure.
And how we talk about it.
Yeah. So would you consider yourself like a syndicator or would you consider yourself a technology? Like, is your company mainly focused on the tech, or is it focused on assimilating the deals, or is it both? Like, what would you say the main focus and the premise of the company is?
Yeah, we're both. And where I look at myself is, how do I serve my customer? And my customer is a retail, everyday American person. How do I give them an opportunity? So I'm trying to give them access to this opaque private markets area, this segment of where a lot of wealth is being built. And that's our primary focus. And I happen to have expertise in real estate. And so this is the area that we're focusing on. And so how do I give back to them? And the way I see it is, if I'm consistently making my product good, which is it's not just the real estate performing, that has to perform for them, of course. Mm-hmm. But that performing, give them a great experience, give them education, give them the tools, then good things will happen to us, our organization, and myself as well. So that's where I kind of pride myself, is how do I take care of that customer? And that's where I'm very focused on.
So when you were growing your clients, and like I say, our proprietary, where do you feel like you found them? Is it social media? Is it old school digital? Like, is it digital marketing? Like, where do you feel like you said, you know what, this is where I'm going all in, and this is where my customer, it's the millennial, it's the person who's 25 to 45, whatever. Obviously, you put together that thought process, right?
Oh, yeah. So what we did, we're part of part of this strategy was you just do everything. You do everything, and then you take the data after, and then you kind of focus on what worked. And it's kind of like chaos because you're just spending money. You're spending money as fast as you can, trying to get customers as fast as you can, and then looking at what worked the best. And fortunately, it worked out for us. We got customers, and today we're optimizing the right channels. And the channels are always changing. There's always new laws and regulations going. There's data privacy laws now with Apple versus Facebook and all that stuff going on. So that does affect some things. And we're able to build the community up now at a level where now it's more cost effective for us to grow it than it was in the beginning stages. So we basically spent the money, paid ads, paid media placements, partners, social media, everything across the board. And now we've kind of taken off the level where it's more organically coming in.
Love it, bro. Yeah, you're probably at this point, you got the machine going. You're getting so many referrals and just organic growth, So that's awesome, bro. When you look at a deal, and then we're going to pivot on to some other questions that I have, but when you look at a typical deal, 150 units, 250 units, kind of give me those metrics that you're looking for. Obviously, IRR at this and equity multiple of that, or what are those kind of 3 to 5 metrics that you look for when you're looking at multifamily deals?
Yeah, I think it depends on the market is changing a lot, right? At the end of the day, but I mean, if underlying fundamentals is, hey, looking at the geographic areas and looking at the growth in those areas. So we've been a lot about Southeast U.S. A lot of migration has happened to those areas. I'll look at the underlying market conditions, the jobs market in those areas. Of course, you want to do something where you see rents going up a little bit. We're not too aggressive with our underwriting. I've seen some aggressive stuff lately. I've seen some stuff that people are trying to put in their pro formas with like 7% month over month growth on things, which is okay. But we usually use a 2 to 1 or a 3 to 2 ratio. What I mean is that a 3% annual increase in rents, 2% increase in expenses, or in some cases we do 2% increase in rents, 1% increase in expenses. We have a team of analysts in place who do that for us. So, and kind of look a step ahead. I mean, since we've performed so well, we get first look at a lot of deals, and we've been out there for such a long time period. We get off market deals right now. So, building that reputation, and especially if you've been in real estate, when you build a reputation of closing, especially in this asset size, it really motivates all the parties involved to take your offer before someone else's because they know you're going to close. And it's still a very traditional business. You have brokers involved. You have title escrow, of course. There's a lot of attorneys involved in these transactions. They're higher price items, and they all get paid. And at the end of the day, like I just said, they want to get paid, and they know if you're going to sign your name in that contract, it's going to close, that they take your deal first. So you usually get good deals to look at.
Man, congrats, bro. What if someone wanted to come in and do a bigger? Do y'all have a max? Like, what if somebody did want to come in and say, "Hey, I'm gonna put down $1 million on this next deal or this fund"? You don't have a max, right?
There's no max. We've had $1 million come in before. Yeah. Okay. Platform.
Awesome, man.
High amounts.
I love it.
It goes high as you want, as low as you want. No, we don't not discriminate against any size.
And those different classes, no matter how much you put in, if it's the same deal, I still get the same return.
Yeah.
Man, that's awesome.
Yeah, we don't do preferred. Yes.
Yeah.
You awesome. Just think of the systems, how it's set up. Think of it's the cost involved, which is crazy. Is what I found out. It's like, so if I need to go wire money, if I'm wiring $1 million, what's my wire fee? If I'm going to wire $500, what's the wire fee? It's the same. It doesn't make sense to me. Right?
Yeah.
Should be a percentage. Use an ATM machine. I'm going to take out $20. You're going to charge me $3.50. Someone has more money. I'm taking $500 out. Okay, I could waive that $3.50. But it just doesn't. The whole thing doesn't make sense to me.
Yeah, that's cool. What'd be the last piece to your business that you feel like you're really trying to innovate? Just like you said 5 years ago when you guys started really focusing on giving everybody a chance to invest. What would you say is like that thing you're really focused on right now in your business to innovate the process?
A lot of financial education, creating more tools to educate people, really to create so they can actually see how they are. I believe people need a personalized approach to investing. So everybody is different and everybody has a different understanding. So how can we personalize the educational process, and how can we communicate to them, how does this fit them at this point in time in their life? It's not like, oh, not later on or now, but how does this fit you today? And I think we have the tools in place today, and we're improving those tools to help people out to make those decisions. It's like, okay, how much do I put in? Do I put in 100,000? Do I put in 10,000? Do I put in 500? Well, how does this work? How does this affect my day to day, what I'm doing day to day? And creating those tools for people, and constantly improving those tools. So that's the biggest thing we're working on right now, to really personalize that for people.
Love it, bro. Proud of you again, man. That's awesome. Yeah. Yeah, we got to catch up offline and talk about some stuff like that. That's really cool. So I got this one section, we call it coming in hot. And that's where I'm just going to throw some questions at you.
Uh-oh.
And it's almost like a 40-yard dash, right? You gotta race to the finish line. What's the record right now? Do y'all remember? 24 seconds. All right. So
that's a little 40 time. 40 time.
So I got 5 questions, and you answer them in one word or one sentence. And you'll see when the show comes out, it's got the music and the fireballs and all that.
All right.
But all right, man. So I'm gonna start the clock, and then you got 5 questions. You ready? Ready, Craig?
Got it.
All right.
Yep. Let's do it.
Do you have a college degree or no college degree?
Yes, I do.
Okay. What was your greatest challenge as a child?
Wow. Getting along with my father.
All right. What was your first attempt at entrepreneurship?
Early age. Geez, I think shoveling driveways, lemonade stands, raking leaves, delivering newspapers.
There you go. What was the worst real estate advice you've ever received?
Oh, the worst advice I've ever received. There's been a lot of bad advice. The worst advice I ever received, I would say they're not like us, Craig.
There it is.
They don't do it the way we do it.
There it is. Who's the one person who made the biggest impact on your career?
I always go with Mom. Mom's the best.
There it is. 49 seconds, brother. 49 seconds.
It's hard. 24 is hard. Yeah, you got a couple.
It sneaks up on you, bro.
And the childhood one got me. It's like, which one? That's a tough one, right?
I know. Yeah. It sneaks up on you. We need to keep up who had the longest one. I think somebody was at like 4 minutes. Remember, and the thing is, he was on set, like he was at like 18 seconds. He got stumped by like that fourth question. Yep. All right. So a couple more questions, brother. When you look at technology, how do you feel like it's changing our industry? And what are you focused on technology-wise to kind of be ahead of the curve?
Yeah, I look at the innovative side of it. How does it make things better? And it's going to make everything better. Every part of society is going to have a technology component to make it better. And so for real estate, it's really coming across the whole board. Every area of real estate is going to have a technology component to it. And there's not one that sticks out more, but I think the most important one that most of us will care about is the data that comes in. So do we have accurate information to make decisions? Mm-hmm. And having that in real time is the better we have that data to make a decision, and the faster we have that data gives us a leg up with things. So if you have that information coming in faster than your competitors, it gives you a competitive advantage over them, of course, to make decisions across the board in so many things.
For sure. I always say data is like the new oil boom. Like as an entrepreneur, That's where everybody's fighting for the data, and then you can leverage the AI and artificial intelligence and everything else. But data is the new oil. You got to have it, and you got to get it faster and quicker than the next person. So that's a really, really good target.
Yeah.
So we get a lot of questions for CEOs and entrepreneurs because they always know that we're busy, we're doing a lot of stuff, we're highly successful. You've killed the game out there in San Diego. The question is, what's your secret to good time management? What's like one of your hacks that you use for good time management?
Oh, great question. I do a lot of time blocking, so I'm always optimizing my time. I'm kind of looking at that almost on a weekly basis. I kind of have a meeting with myself to say, hey, what did I spend time on this week? Hey, what are my 3 main goals? Am I working my task matching those 3 goals? And then I kind of go back and I go, okay, this is what I did this week. And so next week I set up my whole schedule. I time block it out to make sure I'm driving my goals for that week. So it's a very iterative process. And I kind of have the saying, and I think you mentioned this earlier. My saying is do, learn, grow, constantly take action receive that feedback and receive the data so you can learn from it, right? And then that's where growth happens. So I'm always about do, learn, grow. So there's no really success or failure for me. I just look at doing, learning, and growing on a consistent basis.
Man, thank you, Craig. That helped me, bro. Because I'm real big on time blocking. I've been coaching people on time blocking for like 12 years. And I've always talked about it, but you said it in a different way for me, which I think is pretty cool. Like you said, my 3 main goals for the week, the task and the time that I spent, did it match up to those goals? And if not, the next week I need to pivot and make sure it does. I love that, bro.
Yeah, exactly. Because you find yourself, I think there's some kind of, we get this kind of endorphin high. It's a dopamine high of just checking off a task list. And you could get stuck in that. Because every time you get something done, you feel good about yourself. But did that really attach to your goal? Right? So, but if you had a task that you could feel good about that's attached to your goal, it's a win-win. But that's why I think a lot of people start with the tasks first, but you kind of have to look at it. Hey, what's my goal? Am I working on that? And you got to be brutally honest with yourself because, hey, you might be feeling great all day long doing tasks, but you didn't get your goals. So you kind of have to have that talk with yourself or whatever you want to call it and say, okay, what did I do all week? Why didn't I get anything done? Well, you got stuff done. You felt good about it, but you didn't get the stuff done that has to drive the goal that you're trying to achieve. And, sometimes we do things we avoid that uncomfortable situation, right? What's the saying I have is being comfortable with the uncomfortable is part of the process as well.
Love it, bro. Thank you again. What's the secret to good branding? As you were building your company, obviously you did the marketing, but you built a good brand. What do you feel like is the secret to good branding?
Oh, that's a good one. A little bit of I like to say consistency, perseverance. When you're building a brand out, definitely I think one of the big things that we've learned is definitely creating a good team and creating a good culture and a safe place for that team to excel with that. And it's kind of an inside out approach. If I could be good, first of all, myself, you have to be a good person, take care of yourself, and then I could surround myself with good people and treat them well, and then it kind of filters out to the external world. So always start with yourself first, then your team, and then next your customers and the external world. So that's the way I kind of look at it.
Love it. For real estate entrepreneurs, whether they're in tech, whether they're in sales, whether they're in development, what would be 3 things that you would tell them if they're trying to either break into this space and have some success? Hey, here are the 3 things that I think you really need to double down on. What would those 3 things be?
Oh, I'm always a big proponent on like taking action all the time. That's where I got the do from. It's just, I think we sometimes live in our heads. We try to make things perfect. And I think you have to get that learning going. You have to start doing. The other thing is sky's the limit. Think big. There's no reason why you can't do something. And then lastly is, of course, I love to read and learn all the time. I'm a sponge. And if you take that approach and lift every book, meet every person you can, the digital world has so many tools for people to accelerate the learning process, to be ferocious with that, be very committed to doing that. That is something that will get there a lot faster if you learn from other people's mistakes instead of your own as well.
Man, that's good wisdom. Wow. So we call this the moonshot, right? We all got this moonshot, kind of like to the moon. And what's your one dream or goal or just an idea that you feel like no one believes in? It almost seems impossible. What is that moonshot for you?
I think we did it. I think I did it because I remember telling someone this idea and they're like, you're crazy. Why would you go backwards and go to like some person with $500? And I remember having a conversation with the previous company I had for this one. And the guy was like, you're delusional. This is never going to work. So I kind of accomplished the goal I set out to. I'm satisfied with what we did and put together. It's continuing to grow, but we did it. So we're at the 30,000 customer mark. The next level for me, my goals has to do with my family. I have 3 daughters, so just see their development is the next thing in my life.
There it is. Love it.
Yeah.
Yeah, man. That's cool. You're the first guest that we've had who said they hit their moonshot already. That's cool. You had a book you recommended and it's The Dark Side of the Light Chasers by Debbie Ford. Why did you recommend that book? And one of the things that we have is, like you said, we readers are leaders, and we want to encourage our audience and our real estate entrepreneurs to read. So why did you recommend that book? What has it done for you?
I knew her personally, and I met her when I was 24 years old, when I was developing myself into a young man, and I had an amazing opportunity to meet her. She was instrumental in my life, and I thought she had a profound effect upon it. And God rest her soul, she died a few years ago of cancer. She's always battling that through the time period I knew her. And I just felt really fortunate to have her as part of my life. And it's a special book to me because of our relationship together. And a good story was that she wasn't on the Oprah Winfrey show at the same time of this other person. And they both were on the show for the first time in public. And his name was, what's his name? That Dr. Phil guy? It's Dr. Phil. And so he's a little bit more bombastic. So I think Oprah kind of got a little bit more attached to him than to her, but she was her work was phenomenal as well. So I appreciate everything she did for me, and she was a great person.
It's awesome, man. Carry her energy on. So final thoughts, man. Where can our guests find you? And then just leave my audience or leave our audience with your final thoughts to our real estate entrepreneurs.
Yeah, well, you can find me. DiversyFund.com is our platform. We have an app. We're on iOS and Android. Myself, Craig Cecilio, CXC. I am on Instagram, LinkedIn, Twitter, YouTube channel as well. And the final thoughts for anyone in real estate, I'd say, hey, it's really easy to get started. All you have to do is take action. So just take some action, get off your butt, get going. The world's yours. It's not hard to do. It's work. Don't consider it hard work. It's just work. But everybody has an opportunity to make wealth in real estate.
Appreciate it, bro. Great episode. Thank you again for being on the show. We'll stay in touch. We'll connect offline soon, and I'll make sure I follow you on Instagram and Facebook and stuff. But thank you for the wisdom and the knowledge. And like I said, man, you guys know where to find him. Check him out. Thank you again.
Yeah, thank you.